Hello and welcome to the trade setup. In this video we are looking at silver. It is time for another update. We will also be taking a look at gold today. Getting the context of both of these metals could prove useful in the current situation, because we see some differences here in the smaller time frame. Now, since the previous video, we have broken some quite relevant levels of support that would have allowed this structure to still extend directly higher in this movement. Well, I do not really consider this a plausible outcome anymore. I am really set on having this as a wave to the upside complete itself. Whether that is a wave A or a wave 1, at this point I couldn't tell you, and frankly I do not care, because I would still be tracking the same levels of support for a potential larger uptrend to be starting. Now, before we actually move into those smaller time frame details, let's provide the context for this chart, because it is quite important. So, on the larger time frame, since the 2020 low, I am tracking a larger diagonal pattern. We have been previously considering even a potential impulse, but in this latest correction, well, that has become something rather unapplicable. Yeah, we cannot really track such an idea. Maybe if we were to track another 1-2 setup within this area, but frankly, I wouldn't trust such a pattern. So we are tracking this as a larger diagonal structure. We would be currently within the wave tree still, as long as we do not form another high and we do not break below the 61.8% retracement, $57.6, at least within the current count. We would be looking to form one more high within this wave C of the large wave tree, and since this wave C is an ending diagonal, I am looking to build within this wave 5 a 3-wave pattern instead. Yeah, this would be something like a larger A, B, C movement to the upside that would still be expected to take us to new all-time highs before starting the larger wave 4 correction. Now, within this wave 4, we have been ideally looking to actually build an A, B, C pattern. But for the wave C to have actually been a valid count, we would have needed to form one more low. And since we have broken the relevant levels of resistance within this movement to the upside, we have exceeded the proportions as well. Even if we extend to lower prices directly, I would probably be looking for a different count. Given that we have broken this area of a wave C to the downside, I would actually strongly prefer that a bottom would be in place. I would like for the wave 5 to already be unfolding, and based on what I'm tracking on the gold chart, this would be backed up by its expectations, as on the gold chart, we are still holding even the area of support for a potential impulse to be building, and not only that, we have a potential initial 5-week move to the upside, which could prove quite interesting for a trade setup. Now, on the silver chart, this may not be necessarily the case, but that doesn't mean it cannot still push to higher prices. So, in this movement to the upside, we are still tracking the levels of resistance we have been in the previous video, but I also brought back the lower levels, the lower Fibonacci retracements, as we have previously reacted to them, and I want to see if we get even further reactions, if we get rejections, or if we use them as support. I'm quite interested in these developments. And frankly, the 78.6% retracement wasn't even a resistance level for a potential wave 4 within this structure. When we broke the 61.8% retracement, that was already done for, but we have been tracking it because we have been reacting to these levels religiously. We have gotten rejected at each and every single one of them in this movement to the upside, and from this last level of resistance, we have actually gotten the largest rejection yet. Now, in this reversal, we have been tracking the area of support for continuation to higher prices between $74 down to $65.4. As long as this support zone is still holding, we are still looking for the reversal to higher prices. Again, whether that is within a wave C or a wave 3, at this point it doesn't really matter. I am looking for a setup within a smaller time frame, because this degree of a structure has unfortunately not managed to create a reliable pattern that would be providing us high confidence in this continuation to even higher prices. Now, in this structure within this correction, we have been looking even for a potential initial 5-wave move to the downside. I have shown you this idea of a 5-wave pattern where we would have been in the wave 4 in the previous video, or would have started already the wave 5, but given how this structure, how this pattern unfolded to the downside, fortunately I find it rather unlikely that this would have been an actual wave 5, at least within this overall pattern. So this is actually a positive thing, because if we were to build the initial 5 move to the downside, it would have been strongly suggested to us that after a 3-wave correction into the resistance area, we would expect at least another 5-wave move to the downside. Since this pattern doesn't really work that well within this count, we can look for some alternatives. And not to say it is impossible, I would still be tracking the resistance levels for such a possibility for the initial 5-wave move to the downside, but I do not feel there is as much pressure from the internal structure to actually follow through, to actually extend to lower prices afterwards. So instead of tracking this blue interpretation, I want to explore the possibility of an actual bottom being in place within something like a WXY correction. In such a count, I actually have a full pattern. I have 3 waves to the downside. I do not need any further extensions. And we have already even created the largest movement to the upside since this entire descent has started. That's one point. Then we also see that within this descent, we have reacted firstly to the 38.2% retracement. This has started a decent reaction to the upside, but after this follow-up extension, we have now reacted perfectly to the 50% retracement. So we see kind of the same developments as we have seen in this push to the upside, as we were getting rejected at each and every single one of these levels whenever we would reach them. This is actually a positive sign, because each of these represents an opportunity to form the reversal. We do not need to go all the way down to the last level of support to actually start the larger uptrend, to actually start the extension to even higher prices. So I go now into the even smaller time frame, where I have a couple of scenarios. So this could be tracked as something like a 1, 2, 3, 4, and 5. It could work out as a leading diagonal where we would have an overall 1, 2 set up to be placed here. We could be tracking internal levels of support that would allow direct extensions to even higher prices, but I would be cautious when looking at such a setup, at this setup in particular, because I cannot rule out the possibility that this would instead be building a 1, 2, 3, 4, and 5 within the area of a larger leading diagonal, where the wave 3 would have only topped within this latest high. Now, there are two aspects to this. We would expect to push to higher prices within both of these interpretations. Doesn't really matter to me at this point whether this has been a 5-wave pattern complete and we have the area of support down to $72, or if we would actually need one more high before actually being able to track a 5-wave move to the upside to be complete. Yeah, in that case, we would have a higher boundary area of support that would only go down to the 61.8% retracement. And personally, I probably prefer the green interpretation where we get one more high before having the 5-wave pattern complete to the upside. But even if it doesn't manage to fully hold, even if we dip into the lower boundaries, into the lower area of support in yellow, I would actually still like to form another high at the very least within a 5-wave move to the upside on this chart before having a more substantial top in place. Now, if we go on the gold chart, we actually notice that there's been a lot more weakness yesterday. Within this push to the upside, we have failed to create what could have been a wave 5. Not only that, but we already have a significantly larger retracement already in place, and while technically we are still holding internal levels of support, I wouldn't have as much faith for this chart to manage to extend directly higher. Nonetheless, it might happen that on the gold chart we form a lower low, on the silver chart we form a higher low, and after that they will be sinking once more. But for now, this is something to watch out for, because if we break below $4,550 on the gold chart, there is a rather good chance that this structure will form another low. In fact, the pattern that has formed on the gold chart does allow quite easily for one additional low to be taking place before having a more substantial bottom in. Don't get me wrong, it is perfectly possible within this wave C I would be tracking on the gold chart in such a scenario that I would be looking to actually form one additional low before having a more substantial bottom in place. And even though within this wave C, we wouldn't actually like to see any further lows, I cannot rule out the possibility that the wave A had actually bottomed here, that this would have been the B wave top, and we have something like a larger 1, 2, 3, 4, and 5. And in that scenario, unless we actually break some quite relevant levels of resistance up to the $4,665, the 61.8% retracement, I still have to allow this extension within one more low in this wave C to take place. It is perfectly acceptable that within the silver chart we will not form this additional low, and personally I do not even find the smaller timeframes too interesting necessarily, especially on the gold chart actually, because if I zoom out, I have this idea of a potential initial 5-way move to the upside in place. I actually see this as a quite interesting opportunity because we have clearly defined levels of support in a larger wave 2 in yellow. We are extremely deep within the large degree correction in this wave 4 in white, where I know we have gotten a quite big dip below the last level of support, but this hasn't been sustained. So far, I still consider this structure to be in play. I still consider the possibility of building a quite substantial wave 5 on the gold chart to substantially higher prices, where if I were to be looking for a target, well, we would be in for a treat because we would be looking for at least $5,900. Now, especially in commodities, it has been rather common that we get quite extended waves 5. We have an example firsthand in this movement to the upside, right? The wave 3 has formed a quite healthy extension within this large degree. If I actually go into the internal structure and consider this 1, 2, 3, 4, 5, well, the wave 5 of the wave 3 itself is also quite extended. I wouldn't be shocked at all if we form a large extension within the wave 5 itself, which in turn, realistically, if you've been following these updates on the gold chart for a while now, you would know we would still be possibly within a quite substantial large wave 3. There is plenty of room to extend to substantially higher prices on this chart, and at this point, I actually do not even have evidence that this was the wave 3 and not just another 1-2 setup that has taken place here. Ultimately, I'm still looking at this as a potential setup. We have the levels of support clearly defined, and we would be deep within the large degree support zone as well. Now, moving back to the silver chart, here I am still watching for this potential additional high within this green interpretation. If we are to extend directly into the yellow area of support, we have here internally down to $72.1. I would still find it interesting, but be aware that if we get a sustained break below the 78.6% retracement, we might as well be extending to even lower prices. And unfortunately, there are too many options to identify clear structures that would be putting pressure on extending to even lower prices within the smaller time frame, and it would probably be best to work with the large degree correction, which has actually been achieved. We have gotten the 38.2% retracement, but it's only on the futures chart within this out of the ordinary week we have had in this movement to the upside. And for now, there really isn't much else to add beyond this. I would be focusing on the levels of support. I would be watching for a potential internal 5-way move to the downside, but so far, it seems quite healthy. It seems we might even be building something like an A, B, C structure that could have actually bottomed already, as we pushed here into the 50% retracement in green before starting these few green candles in the last hour. And for now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership. And other than that, let me know what else you'd like me to cover, and I'll do my best to do that in the days weeks ahead. And until then, I wish you a nice day and hope to see you in the next video. Bye bye.